Oh boy, do we have a lot of earnings to break down today, guys. We're going to go over Robinhood, Reddit, Crocs, to name a few, and a bunch of other ones as well. And we're going to break down the indexes, which, as of now, all of them are in the green. So, guys, jam-packed video. Hit the like button. Do not forget to subscribe and get your 30 stocks from Moomoo. Open up your account and fund it with at least $100. You get 5 free stocks. Fund it with at least $2,000. You get 25 more stocks. And get this, guys, your uninvested cash now will earn up to 8.1% APY. So, guys, if you want 30 free stocks and you want to help out the channel, check out the link right down below or go to stocks.com/Moomoo. And with that being said, guys, cheers. Take a sip of that coffee. You're going to need it for this video, and let's get into it. So like I said, every index right now is in the green after we had quite a volatile red day yesterday, right? You guys remember that after we got the CPI data, inflation came in hotter than expected on the headline number, and core CPI, which excludes food and energy, on a monthly basis, on an annual basis. All of these numbers came in worse than expected, right? And again, we had a volatile day yesterday. Indexes were down for the most part. A lot of stocks got hit. And today, well, it's quite the opposite. The S&P's up around 0.25% right now. You guys can see SPY is about to break out. I mean, it's testing the top of the wedge here, and it looks like it's about to break out. And if it does, let's say take out 605, 606, 610, 611, all-time highs could be next, right? We're not too far away from that point. So SPY's up around 0.25% right now. QQQ's up double that, about 0.5%. And this one's also at the top of the wedge right now. We're testing it, right? And it seems like it wants to break out. And now what? We're about $7, $8 away from all-time highs on QQQ. Guys, we're one breakout away from hitting highs again, all-time high. So I'm going to set my alert at $532 here on QQQ. And let me go back to SPY and put it kind of right above the wedge as well here, which on SPY is about, what, 607. So I'll put it there for now. Mark is that we're above 607. And the Dow Jones right now is up around a little less than 0.25%. Dow Jones is about 500-600 points away from all-time highs. Pretty much just consolidating. It's been consolidating over the last week or two at this point. And the Russell, which got nailed yesterday, now it's up around 0.5%, rebounding a little bit, but still kind of trying to figure itself out here above this trend line. You guys see we're holding above the trend line still, but we're slightly under both moving averages. We'll see if this is able to rebound on the 4-hour chart. And with that being said here, guys, let's break down some stocks, some earnings. We just got earnings from Robinhood yesterday, and guys, last I checked, we'll see how it looks now, but last I checked, this stock was exploding, and it still is. We're up 14, 13% on the day, trading in the mid-60s right now, pretty much, low mid-60s, and we hit $67 earlier today, which, believe it or not, guys, is not an all-time high. You would think, Stas, it's an all-time high, right? Robinhood's never been this high before, has it? Well, yeah, it has. It has, guys. Take a look at where we IPO'd. This thing, I remember it like it was yesterday, right? I've been making YouTube videos for, on this channel since 2017. So I remember this very vividly, right? Robinhood IPO'd in the end of 2021, right before the bear market started, and this thing went berserk. I mean, this thing went all the way to $85. I thought it was $90, but we'll go with 85. It went to $85. You guys can see here, and yeah, it pretty much went down 95% after that. And here we are. We're now back, We're now back in the mid 60s, but we're still pretty far off from all-time highs. I think eventually Robinhood will get there. I think it will. Just by the looks of it, the business is crushing it. They're growing very nicely. Obviously, they have a bunch of the retail investors. I mean, this app was created for retail investors, kind of to, switch the game up. 2014, I think Robinhood launched. So, yeah, I mean, they took a bit of a hit in 2022 when retail investors ran out the exit door, right? They left the market, not all of them, obviously, but a lot of retail after COVID, the boom we saw in 2020, 2021. A lot of retail lost a lot of money in 2022, and guess what? That caused them to not trade as much on Robinhood, even delete the app, and that made the business struggle at that time, and the stock got hit aggressively. And let's just say the story has turned around. And just a couple of months ago, man, we were at $13. It's not like Robinhood was at 30, 40 bucks a couple months ago and now it's at 60. No, man, this thing was at $13 and now we've come up like a 4x since that point, 5x almost. I mean, this is insane. So Robinhood crushed it, man. GAAP EPS $1.01 versus 42 cents expected. So they crushed GAAP EPS and they beat revenue $1.01 billion versus $944 million expected. So a nice double beat for Robinhood. And I'm trying to remember, have they reported a $1 billion sales quarter? I'm pretty sure they have, but that's great that they're reporting over $1 billion sales for the quarter, which crushed that estimate, right? And I was reading earlier, I'm not sure if it's going to say it here, but I'm pretty sure, guys, and feel free to correct me if I'm wrong, but their EPS is up like 3,000% year over year, something that just made my jaw drop, 3,000%. And I'm pretty sure their revenue is up 120%, something like that, year over year, which is awesome. And we can see here record revenue. There we go. So maybe that's the first time they've ever done over $1 billion, which would be pretty cool. So, yeah, shout out to them for doing record revenue. Crypto revenue's up 700%. That's another thing worth mentioning. In 2022, retail flooded out of the market, right? Stocks, especially stocks especially, right? They sold their stocks, they left, right? They exited, whatever you want to call it. And the same thing happened for crypto, man. Crypto is not looking good. I remember I was in Miami. This must have been July of 2022. Go check the date on that, guys. That's when Bitcoin was at 16K. I remember this like it was yesterday. I was on vacation with my wife. We were in Miami, and I was looking at the charts. I'm like, dang, maybe I should go all in on Bitcoin here. I didn't, and here we are. Bitcoin's at 100K. But at that point, that's when crypto was in shambles. People were selling out of that as well. And it was just a rough year. Let's just say that. Everything now 2022 was a rough year. Everything has bounced back. And clearly it's being reflected in the stock price, right? Retail's back. Stocks, they're buying stocks. They're buying crypto. And there's going to be another wave. There's going to be another wave where, or not a wave, but, there's going to be another point in time when retail gets squashed, Robinhood struggles. That's going to happen. It moves in cycles. But for now, Robinhood's crushing it, man. They're looking great. So next stock here is Reddit, ticker symbol RDDT. This company has also been doing well. I mean, the stock, holy smokes, man, was at $49 back in August, and now we're at $213. I mean, this is unbelievable. These returns are reminding me of, some stocks that we saw in 2020. Not saying that these are bubbles, Robinhood, Reddit. But man, this reminds me of what we saw in 2020 with certain stocks. I forget now a bunch of them, but we were seeing 5-6 X's over a couple months spans like that. It was almost like clockwork. I think Square was one of them. I remember vividly. Back, I think they changed their ticker symbol now. I don't even remember what it is. Either way, I remember Square, man, during the pandemic. It saw something similar to this move. It went up like crazy, and I was like, I should have bought Square. It is what it is. Reddit ended up reporting earnings per share here, guys. Let's see. Where are we at here, guys? Earnings per share. It looks like 36 cents is what they reported on revenue. Am I blind here, guys? Where the heck is the revenue? Here we go. So 36 cents EPS, which beat the 25 cents expected. Revenue 427 million versus 405 million expected. So a nice double beat for Reddit, and they see Q1 revenue of $360 to $370 million versus $358 million expected, and adjusted EBITDA of $80 to $90 million. So great beat EPS, great beat revenue, awesome guidance for Q1 revenue, EBITDA as well adjusted, and Reddit turns second quarterly profit since IPO as daily active unique users top 100 million for the first time. And man, that's impressive. That's impressive. Looks like Reddit shares initially fell, maybe because of user growth miss potentially, but now we're up. This thing sold off originally. Now we're bouncing up, almost back in the green, but it looks like originally the stock fell 20% after earnings. We got down to 173. Now we're back to 211. Clearly, buyers stepped in, bought the dip. Now we filled the entire gap, which makes me a little nervous. I'm like, ooh, so is Reddit going to get rejected here now that we filled the gap back to 215, 220, or do we get buyers to push us through that? I don't know. Time will tell. So we got Crocs earnings. A little voice crack there, guys. Crocs earnings, those came out this morning, and the stock's up 20% right now, guys. Very big move for Crocs, which the stock has not been doing well. Going back to the 4-hour chart and on the yearly chart, you guys see it. We've been downtrending for months at this point. Still on a downtrend even after these earnings came out. So Crocs reported earnings per share on an adjusted basis of $2.52 on revenue of $989 million. So that beat the $961 million expected, and adjusted EPS also beat the $2.26 expected. They see full year 25 adjusted EPS of $12.70 to $13.15 versus $12.58 expected, and they project revenue growth of approximately 2 to 2.5%. I guess for the full year. So yeah, I guess that's good enough to push it up 20%, but the stock is still not looking pretty, guys. On this chart, we're still very much in a downtrend with really no signs of a breakout, at least as of now, at least based on what I'm seeing here, right? You guys see this could break out, but we're just not there yet. We're still technically in this channel, so I'm going to be eyeing up Crocs. CROX is the ticker. I'm going to set my alert at $115 per share, which is right around the multi-week high I'm seeing right here. We kind of got rejected there all of December into January, so keep your eyes on Crocs. Datadog is another one, and honestly, guys, wait, hold on. Before we get into Datadog, make sure to join the email list. I forget to mention it sometimes, but it's free. It's linked down below, and I send you guys my top stocks weekly. So if you guys want to be in there, all you have to do, it takes 15 seconds, literally. All you have to do is put your first name and your email address using that link right down below. Make sure you guys join that. No spam, none of that. No credit card info. Just straight up value. So get in there, use that link. So Datadog is down 11%. And wait till you guys see the next stock. How much the next stock we're going to talk about is down. It's nuts. So Datadog's down 11% right now. We're essentially dumping down to a multi-month low, right? Now we're testing levels that we haven't been at since Thanksgiving pretty much. We're back to 125, 130 bucks on Datadog after just being at 170 not too long ago, early December, right? So Datadog reported adjusted EPS of 49 cents, which beat the 44 cents expected on sales of $738 million versus $714 million. So they beat EPS, beat sales, which is great. You're like, Stas, wait a second. Why is the stock down? Well, it's because of guidance. Q1 adjusted EPS, they see 41 to 43 cents versus 46 cents expected. Not the best there for EPS guidance for Q1. Looks like revenue guidance for Q1, 737 to 741 million versus 740 million expected. Pretty good, but the lower end of the guidance is under the estimate, which is another reason why we could be falling. And they see full year revenue of 3.17 to 3.19 billion versus 3.23 billion, and they see EPS adjusted for the full year $1.65 to $1.70 versus $2.05 expected. So yeah, I mean they beat EPS, revenue. That's all nice and dandy, right? But yeah, I mean the guidance was bad. It was bad, under the estimates all across the board on EPS, revenue for Q1 and for the full year. That's going to cause this kind of drop. And at this point, man, it's a falling knife. I'm not touching this thing until we get some sort of support, maybe a sign of a rebound, which we're just not getting right now. So last but not least, guys, and let me know in the comments, by the way, if you stuck till the end. Say stuck till the end, or drop a fire emoji or something. And make sure to subscribe, by the way, guys. I think 70% of you watch the content, which I appreciate a lot. Trust me, I do. But you're not subscribing. So if that's you, make sure to subscribe. It takes a second, and we're on the road to 100,000 subscribers. So wait till you see the trade desk, guys. TTD is the ticker. This thing is in free fall. Forget about a 5%, a 10% drop. We can live with that. That's not a big deal. But a 30% drop, yeah, that means there's something not going right. And this stock was at 140 bucks back in December, literally 2 months ago. Whatever that was, 3, 2, whatever. I don't know, whatever. My math sucks today. It was 2 months ago. Whatever. But now it's at 82 bucks. This is insane. It's down 45%. Man, that is not normal, especially in a bull market. This is not good news, man. So they reported earnings per share of 59 cents adjusted, by the way, which beat the 56 cents expected, and sales missed 700, quite the difference, $741 million versus $758 million. So double, not a double miss, but they beat EPS, and missed on sales. And it looks like Q1 revenue expected to be more than $575 million versus $591 million expected. So they missed sales, right? Q1 revenue is weaker than anticipated. And let's see, anything else? Trade Desk had investors worried. Those fears have been confirmed, says this headline. And I'll be honest, I'm not a big the Trade Desk kind of guy here. I haven't studied this company or dove into the earnings release for this report. I'm just assuming it was really bad. They missed missed revenue. They missed on guidance. I'm reading this little article here now. It says Trade Desk reported blah, 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 blah. Trade Desk said it had embarked on a reorganization in December to improve connected TV, retail media, and other aspects of the business. Going into the report, Wedbush analyst Dan Ives had cited a survey showing more modest spending growth for Trade Desk in the fourth quarter, blah, 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 blah. Yeah, I mean, guys, it's the guidance. The guidance is bad. Very bad, and I'm sure there's other things here going on that I'm missing. But a 30% drop is no joke. It's no joke. We're in a free fall right now. We're getting close to the lows from early August. Yeah, it's not looking the best. So, what do you guys think? Let me know your thoughts in the comments. Hit the like button. Do not forget to subscribe here on YouTube and get your 30 stocks from Moomoo. Once you open up your account and fund it with at least $100, you get 5 free stocks. Fund it with at least $2,000, you get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY. So guys, get on it. Use that link down below or go to stocksurfast.com/Moomoo. And with that being said, cheers. I'll catch you in the next video.